More oversight for cryptocurrency trading may be on the cards. The Monetary Authority of Singapore is seeking feedback on regulating the digital asset ecosystem. Industry players say they welcome the regulations.
Singapore Central Bank is proposing regulations for consumer access and business conduct around crypto trading. Retail investors may be required to undergo a risk awareness assessment. Crypto providers may also be restricted on offering incentives. Debt financing and leveraged crypto transactions may not be allowed. Business conduct measures call for crypto providers to segregate customers' assets from their own. They will need to disclose relevant risk, crypto listing, and governance policies. Providers should also identify and mitigate potential conflicts of interest and establish complaint handling processes. Such regulations aim to reduce consumer harms, but will also elevate Singapore's standing as a digital asset hub.
For us to retain our role as probably the number one crypto centre in Asia, which we are right now, we do need regulation. We do need clarity around law to make this an investable proposition. And we'll continue then to have more fintech and crypto firms establish themselves here to move into Asia. And that is part of our strategy in Singapore.
MAS's new proposals may be new to some cryptocurrency providers, but other crypto platforms already have their own safeguards in place.
We have our own internal requirements over and above that on ensuring that technology is sound, there's sufficient liquidity, it's not susceptible to manipulation, and only once all of this criteria is met do we open up that asset for the retail users.
CoinHako believes that regulation and customer protection will be beneficial to its own growth.
From our perspective, this is a space that we want to grow. There's definitely some bad actors out there, so we want to make sure that if people are trusting us as their entry point into the space, we are taking the time and effort to make sure that they're not falling for things that can easily be avoided, and that we're able to educate them so that as they push through this space.
Singapore's largest lender, DBS, has also expressed support for the proposed measures. DBS says that the proposed regulations is the right step forward to protect retail investors. It adds that the moves will mitigate the risk that cryptocurrency speculation poses. DBS says investors need to understand the risks and consult professionals before investing. The bank is prepared to work with Singapore regulators to shape a safe digital assets environment.